clash between the presidents of Ukraine and the US at the White House not only reshaped America's and Europe's geopolitical priorities, but also influenced currency markets. At the same time, investors remain focused on the US tariff policies. After all, among all the previously announced trade duties, only the 10% tariff on China has actually been implemented so far. Late last week, Donald Trump once again mentioned the possibility of a 25% tariff on the EU imports. Meanwhile, the US Secretary of Commerce confirmed on Sunday that an additional 10% tariff on Chinese goods has been approved and will take effect on March 4. However, the previously announced 25% tariffs on the Mexico and Canada are still subject to potential adjustments, the officials said. Against the backdrop of a new uncertainty, the US dollar moderated its rally. Its index opened today, consolidating in the range of 107.00 to 107.40. Economic reports could also be reason for the weak dollar. Inflation in January matched expectations, with the annual CPI falling from a 2.6 to 2.5%, but consumer spending disappointed. Consumption activity accounts for more than two-thirds of the US economic output and slowed to minus 0.2% last month. There are several reasons for soft consumption, from Trump's tariff announcements to the wave of layoffs and repatriation. In any case, the outlook for the US dollar is far from the optimistic. Meanwhile, the euro is setting the tone for the main currency pair as Europe takes on a leading role in supporting Ukraine and reshaping European security architecture. For now, there are just words. However, potential increase in defense spending across the Eurozone could serve as a strong economic driver. As a result, the euro-dollar pair saw optimistic growth on Monday, trading in the range of 1.0386 to 1.0453. The instrument confidently tried to break through the key technical resistance at 1.0450. If the bulls manage to hold about this level, a new euro rally could be on the horizon. In the medium term, the key barriers for the euro-dollar pair remain at 1.0500 on the upside and the 1.0200 on the downside. However, as the trade tensions escalate, the US dollar is likely to regain its bullish momentum. Meanwhile, cryptocurrencies attempted to confirm their bullish momentum, benefiting from Donald Trump's crypto-friendly stance. The US Strategic Reserve is expected to be backed by Bitcoin, Ethereum, Ripple, Solana, and Cardano. However, these plans remain on paper. Although Bitcoin initially reacted with a 10% rally to the positive news, crypto bulls quickly lost momentum. And moreover, skepticism regarding the realistic implementation of Trump's plans seems to be growing. Oil prices closed the week in the red on Friday, wind down by news from the White House, tariff threats, and Iraq's decision to resume exports from Kurdistan. As a result, Brent crude fell by 4.7% in February, with the last week of the month accounting for a 1.7% decline. However, several factors have shifted sentiment. The risk of disagreements within OPEC Plus has significantly decreased, and Donald Trump has not reiterated his desire to slash oil prices. As a result, Brent opened a new week with modest gains, trading within a daily range of $72.30 to $73.70 per barrel. Not the least role in this was played by reports on the growth of business activity in China. The manufacturing PMI received today exceeded forecast of 50.3 points and rose to 50.8 points. The ruble strengthened as relations between Moscow and Washington took a sharp turn. However, much of this rally was driven by market euphoria. In reality, Donald Trump extended existing sanctions against Russia for another year. At the same time, a strong ruble undermines the business of commodity exporters and does not align with Russia's budget calculations. Given that both the Minister of Finance and the Central Bank of Russia have enough leverage to influence exchange rates, their intervention in the current situation may soon be expected. So that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us, and see you soon.